Welcome, everybody. Thanks for joining us. This is mine and Jody's first podcast, the Caleb and Jody Moore podcast. And Jody, we made it.
We made it.
We finally are here. We've talked about this for a very long time.
Yes.
And we finally gotten over that fear, and we are here. And I'm grateful that we get a chance to do this. And so some of the things that Jody and I are going to talk about throughout our podcast, we got three main things that we want to hit on every single time that we're here. One is real estate. Jody and I have been in real estate business for 16 years, and we have a lot of experience in that. And then the other thing we want to talk about is business, because not only have we been in real estate, we are the owners of a real estate company, co-owners of it, and we have Airbnbs and rentals and investment stuff that we want to talk to you about, and then just life in general. We want to visit more about life and how that's going, and it's just things that we're reading, things that we're experiencing. We have three small boys.
Yes.
And so parenting is fun.
Yes. Parenting is fun. I think where we need to start here, Caleb, is, okay, so the audience may know us. Some may say, some may not. But I'd like to go ahead and start with introductions and just kind of lay our foundation out, because I think that's important to know where we've come from, because maybe not you, but I look really young. And I'm thinking that people are like, man, does this girl know anything? She's just out of college is what I think they're thinking. But anyways, so Caleb and I actually graduated together from the same high school. Yes, we're high school sweethearts. And so after that, we went to college at the University of Central Arkansas here in Conway, in Arkansas. And then soon after that, we got married. So we were at school for 4 years and then got married. And basically about, I think the same year we got married, Caleb, you got your real estate license. Mm-hmm. I was like, whoa, what are you doing? You're getting a big boy job. He said, I will never work for my dad. And then I
wouldn't work for my dad.
And you're working for your dad.
Yeah.
And look at us today.
Yeah.
So, and then from there, basically, I actually had a degree. I got my degree in marketing it's a business admin degree with an emphasis in marketing. And I said, hey, let's just do this real estate thing together. So I got my license in 2010. And then from there, we basically became a team the following year, which was in 2011, and then kind of never looked back.
Right.
And so how many years is that? 14, 15?
Yeah, when everybody was getting out of the real estate
That's
business, we were getting in the real estate business. And thankfully, we were just young and dumb.
That's right.
And we were just like, hey, let's just do this. We don't know any difference. What's a bad real estate market? We don't know what that is. So it's 2010, 2011 were learning experiences for sure.
At that same time, we also became youth pastors of our church. And so and we also bought our first house, which we'll get into. But it was so much of a learning curve. I don't remember those years very much. I just remember like learning, always being stretched. We were always on the go, and it was fun. There was a lot of energy put in behind that, which is where I think we built our business on, was like that boots on the ground foundation. You just go and you get it done, right?
That's right.
And you try new things, which is why we're here. Like we're ready to try new things.
That's right.
And be adventurous.
That's right.
So after that, I'd say from there to today, Caleb and I have sold just over probably $125 million in sales. So we have a lot of experience behind us in dealing with buyers, sellers, and what the market kind of means for us.
Right.
Okay, so also since then, we've had three beautiful boys, and they are 6, 2, and 8 months old today.
That's right.
So they are adorable. And then other than that, we're heavy in our community.
Yeah, and I get to work with my mom and my dad.
It's a family-owned business.
It's a family-owned business. Mom and dad started it and have run it. We've been almost 30 years. Almost 30 years?
No, 26.
27. And my brother Jacob is also in the business, so it is truly a family business, and we love it. Love getting to see everybody every day, and it's been fun. And it's been fun working alongside you. Couldn't do it, wouldn't want to do it without you. So it's been fun.
So, well, thank you. Fun is what I like. So also, Caleb, let's talk about we are realtors. Yes, we love our community and our family, but alongside real estate, what else have we been able to kind of accomplish that kind of lends us to the business side of this whole world? So, for instance, explain, what does our portfolio look like right now?
Yeah, so we have, I don't know, a dozen or so long-term rentals. We have 2 Airbnbs on Pettigene Mountain. And that's a whole conversation that we get to have about
Yes.
Airbnbs at some point, because
We'll get
that's
there.
fun. And we flipped, I don't know how many houses that we've bought and remodeled and sold.
I have on
those-
record that we've done at least 6. So
we've done more than that,
well,
for sure.
I would say you've done more than that.
Okay.
At one point, you bought a house without my permission and even had no idea
We
what was
made a
going
lot
on.
of money off that.
And then
I don't know.
I just remember you came to me for lunch and you go, by the way, babe, I bought a house today. And I was like, wow, we can't even pay our credit card bill. We bought a house. This was when we were very, very young. So,
Yeah.
but it's fine.
It was great.
We made it.
We made a lot of money off that house.
It's okay.
It was fine. I got you.
You did.
I know what I'm doing.
That was back
Yeah.
in the day when those types of properties were
Yeah.
existing.
Well, you go to an auction, you never know what you're going to buy.
Yes.
So I went to an auction and I said I can't pay more than this, and then somehow I won it. So
That's good.
yeah, but no, we flipped a lot of houses. I don't know. I mean, we're north of
and
close to 30 houses that we've bought and probably sold.
I was going to
Yeah.
say a lot of those. Well, it necessarily wasn't purchased as a flip property at the initial beginning. It might have been purchased as a rental for a couple of years, and then we added value to it, and then we flipped it.
Yeah.
We turned around, made our money back.
Right.
So anyhow, okay. So that gives us some background on why we're here today. Anything else that I'm
I
missing
think
on that?
part of the experience that we get to bring is that I'm the broker of one of our offices. We have 5 different offices throughout the state of Arkansas, and that's been an experience in of its own. And so we have probably just a little over 50 agents that work for our company.
Yeah.
And so that's been fun to
Grow
and get to
that
know
side of it.
them and understand the not just growing a business, but when you grow, how you grow, the vision in the way that you grow. When you go into a different area, you have to understand the culture that you're going into.
That's good.
And how your vision sets into that. So all things that I've learned some and am learning more of as we do it. And I get to share those experiences with our viewers, and I'm really excited about that.
Why don't you speak to the vision for just a minute?
For this podcast?
Well, for Moore and Company, for who you are, for who we are.
Yeah, so our vision for our company is we're going to be the most professional, best educated agents that go into the field. And we're not going to have the absolute biggest offices. Don't want the biggest offices in all these areas, because when you get too big per office, you lose that touch with your agents. You lose touch with what is important in those communities. So we want to be the Navy SEALs. You know, like we want to have the elite group of agents that are well trained, well educated, high integrity, high character, that go out into these markets and sell a lot of stuff, because they understand that when people see our agents, they're going to know their stuff. And they're going to take care of me, number one. Not themselves, they're going to take care of people. And I think that's our vision as we go into these different places throughout Arkansas is that we don't want to just be the residential people. We want to be the land people. We want to be the farm people. We want to be the commercial people. And we train on all of those things so that when somebody asks us the question, we'll know the answer, or we can go find somebody that does know the answer.
Yes.
So that's my vision in a short term.
I love that.
All right, so I want to transition over to insurance, right? Okay, so we've talked about it, we've hit about it, how the affordability factor in our market has been really bad. But one area in particular that has been really bad that not a lot of people have talked about, they felt it, but they haven't said the reasons why, is insurance. And as we go into these markets, we get a house under contract. And how many times have we seen this in the last year? Is that a house goes under contract, they know what their interest rate payment is, and then they go and get a quote for insurance. And it recently it killed a deal for you and I, is that they went and got a quote for insurance, and it was like double the amount what the bank had estimated for insurance. And they were like, we can't afford it. And they had to say, they had to terminate the contract. So let's talk about insurance. Why is it so high? I mean, this simple question, like, what is making this insurance market go through the roof?
Well, some would call it climate change, and others would call it just natural disasters.
Yeah.
And part of it, the Sun Belt issue, the fires in California. So we have in 2024 alone,
Mm-hmm.
Texas had 20 hits, if you will, natural disaster type, where the insurance companies had to come in and basically rebuild.
Just last year?
In 2024 alone, there were 20 hits in Texas. And so
I don't even think of
State Farm
Texas.
lost a lot of money.
I don't even think of Texas as one of those areas where it's like,
well, they
gets hit a lot. I mean, I know they've had like Houston got flooded a couple years ago, but when I think of natural disasters, I think of Florida and I think of California a lot, but Texas 20 times.
Yeah. So State Farm lost a lot of money. Actually,
They all lost a bunch of money.
State Farm, according, I guess, to Inman, they've already paid out $1 billion since February 1st in the state of California.
Or so I say that's because of California's fires.
That's correct.
So these fires came through. Now, there was a lot of insurance companies that had,
I don't think I would get into that.
There's a lot of insurance companies that tried to get out before the fire started, but I don't.
Whatever
some
you
of them-
believe
some of-
about that is your.
Yeah, I mean, well, I think, hey, is insurance companies look at risk, right? I
Absolutely.
mean, what's the risk involved in these areas? So, like California, high risk area, right?
Right.
Obviously,
Florida,
they have
high risk.
fires, and then you have hurricanes, and then North Carolina, you had the unbelievable amount of floods, right?
Man.
I mean, so you just all over the U.S., you had these
So what-
incredible natural disasters.
Unfortunately, where these natural disasters have been hitting lately, they in past they're desirable areas because of the climate is beautiful, right? And people flock to Florida because of the warmer temperatures,
Right.
The water, that type of thing. But no longer is it affordable to
No.
live there. So
So let me give you a stat real quick.
yes,
So starting around 2017, the property insurance market began to destabilize. This is CBS. To destabilize as more frequent natural catastrophes occurred. Insured losses arising from natural disasters were calculated at $121 billion and almost $125 billion in 21 and 2022.
wow,
So, which are both well above the 10-year average of $81 billion. So in two back-to-back years, I mean, we're talking about just last year with the natural disasters, but
Yeah.
you go back to 21 and 22 and those natural disasters,
yeah,
and already working into the coming year, you're already, boom. Even in 2025 is when California's fires happened, right?
yeah,
So, I mean, that's on the books in this
year.
year, not even last year when we're talking about, or the last couple of years.
yeah.
So the incredible amount of claims that were filed in that amount of time in the last 5 years alone has been unbelievably high. So, and then then you got, so what would you say, like the name of the 5 most expensive states, would you say for insurance?
California,
California,
Florida, Texas, what's the other one? South Carolina,
Nope.
Washington.
Nope. You got Kansas,
Oh, tornadoes.
Kansas,
Okay. Oklahoma.
Nebraska, Florida, Colorado, and then you have Oklahoma, which is surprising to me. Oklahoma
Oh.
is the highest for per year, and it is on average $5,858 per year for you to have homeowners insurance in Oklahoma.
Say that again. How much? 5,000?
$5,858 per year.
What's our homeowners quote,
I don't
Caleb?
know.
I think it's
not that
21.
much. I think it's
2,100.
Yeah, I think it's some. Yeah,
And we have a 2,000 square foot home. So
Yeah.
basic kind of average living. So Man,
But on average, over $5,800 in Oklahoma. It's right next door.
somebody could do the math on that really quickly, but that puts most home buyers, that puts it as much as their mortgage payment.
Yeah, absolutely. So
Not
you can
as
see,
much, but
so these insurance companies
a
are
lot.
leaving these states
Yes.
because of
Let's talk about
the
that.
high- okay.
Americans are on the move. And
Okay,
so
yep.
there's, and another, I'm just throwing out extra stats here, but basically, according to, I think this is another Inman. So it says that starting with Americans are on the move, and by 2025, there will be about 5.2 million home people migrating.
Yeah.
For the reason of moving out of these natural disaster areas. I'd say us sitting in central Arkansas, we're looking pretty good for acquiring new people. And we were either ranked number 1 or number 2 in Arkansas last year for most moved to state.
Right.
And I think we are ranked that same for 2025.
Right.
So that's amazing.
That's a great stat. And I think because you're seeing that insurance is affordable, taxes are low, school ratings are relatively high.
Yeah.
I mean, we've done a really good job in our state with schools for the
That's
most
right.
part. And I think, so we're growing in those areas, and I think we're seeing some positive business growth in there as well. But I think too is that insurance companies, I mean, like California has a major problem with insurance companies. So you got Allstate, State Farm, Farmers, and then some other smaller companies that I didn't know about, Chubb and Tokyo Marine. They're all left the state of California.
Well,
Okay?
hold on. They left it because here's a stat that says on Monday, this past Monday, State Farm asked California Department of Insurance to increase the rates in the state by 22%.
Yes. So what happened there is that State Farm gave California a notice, and this is back in 24, that said, "Hey, California, we're getting out."
Yeah.
Okay, and they had a plan to get out, and California came in and said, "No, wait, you can't do that. We're not going to allow you to do that." Now, I don't know what right the state of California has to tell a small business, or a business, not a small business, that they can't do something, but they were trying to force State Farm to stay inside of California. And of course, State Farm is then coming back and saying, well, listen, if you want us to stay in the state of California, then the only way that we can afford to do that is to go up by 21 or 22% on the policies, which for a lot of these Californians is another affordability problem with the amount of taxes that they pay.
And inflation on
the
just
amount of
living,
inflation,
cost of
it's
living.
just cost of living in California is so high. So the idea is that State Farm is trying to say, listen, you want us to stay involved, you want us to stay here and keep these policies in place. We're losing billions of dollars, and we can't do that. How as a company could you sit there and say, hey, I'm comfortable losing billions of dollars?
No.
They're saying we're going to get
not
out.
okay.
They put notice in there. All states already said we're out. Farmers have said we're out. And you're going to start seeing a insurance problem on the coast with a lot of these places, because some of these states don't have the right policies in place to where the risk is so high. Now, I mean, there's nothing you can do with a hurricane. Okay, like, hey, hurricanes, that they're just going to happen, right?
Yeah.
And sometimes natural fires just sometimes naturally happen, but there are things that you can do to try to mitigate the risk.
Right.
And in parts of California, I don't think they were mitigating that as much as what insurance companies thought that they could. Now, that's their opinions, not mine.
Sure.
But I think that they were going to get to a place where, hey, Arkansans, people in Missouri, people in Illinois, whatever the case is, we are all seeing that the increase because of all this other natural disasters. We're feeling the effects of it as well because they're passing the bill to us.
Yep.
And we've experienced it ourselves. We've got notified insurance is going up on multiples of our rentals.
Yes.
And that's just part of the game that we play. But
so do you think we can potentially offset rental cost in order to recover?
Say that again?
Do you think will rent prices go up to offset some of that
I think they've gone up
cost?
as much as they possibly can. I mean, I don't know if you can get any more rent. I mean, you can try. I mean, obviously people try, but I think
Just
you're
curious.
seeing. I think nationwide you're seeing a delinquency in rent because
It,
because of what because of the affordability factor that we're all saying right here that everybody's experiencing. So I think we have property management. Have we seen a delinquency more in the last 6 months?
you mean people not paying
People
their
not
rent?
paying their rents.
Yeah,
Have we
that's
seen
true.
more delinquency in people not paying their rent than we have, say, in the last 3 or 4 years?
Yeah.
Yes. The answer is yes. Has that on a nationwide level? Are we seeing that too?
Yes.
So I don't think you can go up much more on rent because we've already worked all the rent up as possibly we can. I think we're going to start to see that vacancy rate go up, which means prices are going to start going down. I don't think it's going to happen real fast, but I think that is something that people are experiencing more of.
I think you're right. I think you're right. There was, I don't have it pulled up in front of me, but there was somewhere I saw that there were so many multifamily, multi-units built over COVID that they're just now beginning to be able to get rented,
Yeah.
if you will. They're just because they're so large, right? They're projects. So
Right.
they're just now flooding the market over the last year,
Yeah.
which has absolutely added a lot more units to our market,
Which waters down.
which makes
Yeah.
for a higher vacancy rating.
That's right.
And with that, along with
But I want
Go
to stay
ahead.
with the insurance that you
Yeah,
had. You
let's
had
go.
a stat that was incredible. It was about the 3 cities that experienced the highest appreciation in or highest increase in insurance rates. Do you remember that? There was 3. It was like Miami. Most of them are in Florida.
yes, I do. I have it. Okay. As climate risks continue to grow, so do the cost of ownership. Insurance premiums are rising, with the largest increases in Miami at 322%,
Wow.
Jacksonville 226%, and Tampa 213%.
So all these in Florida. Okay, but just the simple fact that you're having a 200 to 300% increase
Oh, crazy.
is insane.
So
It's
if
insane.
it was like $1,000 for you before, it would have been $2,500 at that point, more than doubled.
Yeah.
So
Wow.
I can do the math real quick, but my goodness, that's
crazy.
insane.
Okay, so one other area I want to hit on with insurance. Okay, so I'm gonna read this. This is from Arkansas Business Magazine, and they interviewed this lady, and she's a CEO of Arkansas Bankers Association.
Okay.
And one of the things that we don't talk about, okay, so we know that the natural disasters caused this huge increase, but what's the other thing that causes the huge increase, right? Well, what else happened in the last couple of years? What else spiked? It was the cost of construction.
Oh,
So the
because
cost-
of COVID.
Yeah, the cost of construction,
Right.
the 2x4s were more expensive, plumbing materials more expensive, and then what else went up? I mean, so then you have the cost of concrete,
metal.
yeah, all of it went up. But then you have labor.
I was gonna
that
say
went
labor.
Up. So how do they do their labor? Well, they say, okay, well, I'm going to spend as much. Whatever I'm going to spend in material is how much I'm going to charge you in labor.
So, in fact, that stat is now almost 60-40, 60 labor, 40 materials.
So it's just incredibly high, right? So
Yes.
so then you have the insurance companies that are having to say, all right, we're going to pay for this new roof. And like everybody got new roofs. You had this new roof thing in
Yes.
2021, 2022 where everybody
We
was
got
getting
our
roofs.
sellers new roofs. all year
all
long.
inspections, I want a new roof. I want a new roof. It was a problem for these insurance companies because guess what? Yeah, there's hail damage. And yeah, the adjuster said, yeah, there's hail damage. But then you had these roofing companies that were established that said, hey, we'll give you a free quote. Let us go up there and do it and see if we can get you a new roof. And they were coming into our towns by the droves and driving by, getting quotes, and then messing with the insurance companies themselves. That's just a business model. I'm not saying there's anything wrong, but it drove roofing prices way up,
Yeah.
right? Because of that.
Yes, I remember that.
So there is this labor and construction cost that goes alongside all these natural disasters that just kept driving the prices up. And they're like, man, we can't afford. These insurance companies had to adjust. But the area that's going to hurt us the most, I believe, is what this lady hits on. And she talks about, okay, what happens when somebody buys a house? They go and they have to have insurance. The lender, the bank makes them
Requires them.
requires them to have homeowners insurance because they want their
Correct.
investment protected, right?
Right.
Right.
Understood.
So this lady says there's two factors, which one I talked about. She said the first one would be the higher premium. She said they are built into the mortgage payment, right?
Correct.
They're built into the mortgage payment. The bank repays the insurance premiums. Then it's in your payment every month. Well, if that premium goes up, your mortgage payment goes up. And the problem is that some homeowners and some businesses may already be at their max for their mortgage or commercial loan. If the borrower can't pay a higher premium, the bank has already prepaid it, so it has to be recouped. These situations can lead to foreclosures. One troubled businessman told her recently that her premiums went up by double.
Goodness.
So
Goodness.
when the premiums go up, so you get a letter in the mail that says, hey, your payment is now, what started out at $1,400 is now $2,100.
Yeah.
You're maxed out.
Yeah.
What are you going to do?
If you can't afford it, you sell it. And that's what I think we may be seeing.
Yeah.
Goodness.
And that might be where we might be seeing, March and the summer months and stuff like that, where we start to see more houses come on the market because as they start to see the affordability problem that we're coming to, is they're like, we can't afford another $400 or $500 a month in our premiums, and so it's driving people out of their houses, or they're going to have to look at a smaller. They're going to have to downsize, right? They're going to go to rent, or they're going to downsize because of what insurance is driving them to. And if you're in New Orleans, or if you're in Florida, and those premiums keep going up, what are your options? So your stat a minute ago that everybody between now and 2055, you're going to see these millions of people flock. Well, it's because of the affordability of where we are at in position in Arkansas. It's just a lot less. It's a lot easier to live because of our cost of living is so much further down. But in these other areas, and we're experiencing the same thing, but maybe not on their level, right?
Yeah, right.
So it's just, then if they can't afford the roof, so the roof is leaking, and they said, hey, well, you've got to pay $10,000 now because your insurance changed.
Yep.
Right? So now it's, instead of $1,000 like it used to be,
Yep.
now it's $10,000 because the insurance is making you pay it. What are they having to do? Put it on a credit card. Put it on a
Deferring
credit
debt.
card. Deferring debt. What is that? What's that debt?
Then you're getting charged on that debt, interest on the
like
credit card.
21%.
Which
You're
is,
getting charged 21% for that new roof that you have to have. And that thing is, now you're stuck with paying minimum payments, most of them. And it's just a recurring, it's a death loop at that point, which I know that's the later date, but I'm just saying, like, all these things are intertwined into this affordability factor that we have gotten ourselves into in this country that is going to start to flesh itself out this year and in the coming years. And I think part of what you and I want to do is like bring light to that and say, hey, it's not all doom and gloom. That's not what we're saying.
Right.
But what we want to do is be real with people, right? We want to be real with where that's at and where we're at currently and where could we be going. And then you can adjust. If you know it, then you can adjust to it.
Absolutely.
And make a smarter decision for you and your families.
Well, setting expectations to the best of your ability.
That's right.
And helping people understand what the new norm is. Because here's the thing. We were talking yesterday. Me and you were out to lunch. And we were saying, this in itself is a luxury. So this is the type of thing that it's like, if we needed to cut, you just quit going to lunch. Or you quit going to buy that extra thing.
That's
or
right.
at the grocery store, you just skim down.
That's right.
But there's got to be a give somewhere. And my hope is that people don't just give their home, but that may be where a lot of people get to. But yeah, absolutely.
Napoleon Hill, and I see the book sitting up behind you. That's what made me think of this. But Napoleon Hill in his Think and Grow Rich, he said there's a law of economy.
Yes.
And it says you can only give before you have to eventually take.
Yes.
All right. And so there's only so much that the economy is going to give before then it turnarounds and has to take. There's only so much these insurance companies can give before they turn around and have to take. It's the law of economy.
Yeah.
And so what we're experiencing now is the take. because we've experienced the give
So would
back in
you
21, 22.
That's correct.
Yeah.
Would give me, and in the form specifically for me and you in our business, in the form of equity,
Absolutely.
and
Yeah.
and glory days of like going
That's
and
right.
being able to afford things. So, real quick, would you express the term? Maybe are you hinting at the R word anywhere? in
No,
there?
not yet. I'm not. I don't want to hit at the word recession. I don't want to do that just yet. But because
Where the take is?
where the take could be. I mean, obviously, any.
Okay.
Yeah, we're gonna get to that. I'm looking forward to that, but I don't want to give out. But we definitely foreshadow that there is going to be a conversation that we got to have about consumer debt. I think that is we're not in a housing bubble. We're in a consumer debt bubble.
Yeah.
We're not in a foreclosure problem. That's not going to happen. But we got to have that conversation about consumer debt in this country.
And that debt counts against people. That credit card debt counts against you for your affordability when you go to purchase a new home.
Yeah.
And so everything, like you said, it ties back together.
It ties.
So,
all of this, what we're talking about, ties in together.
do you want to end on any kind of a life segment for you? What you've been reading about?
Well, I mean, I'm always in a good book.
What books are you reading right now, Caleb?
Atomic Habits.
Ooh.
Atomic Habits, great book.
Who wrote it?
Well, you're putting me on the spot right now.
Okay.
Clear is his thing. Is James Clear? I think is his name.
And it's a fairly recent book. Like,
it's not.
Like
it's not
2017, I believe.
Yeah,
2018?
something like that. But it's a great book, and I would say the first 2 chapters are. If you don't read anything else, read the first 2 chapters.
I'm good
It'll
at
change
that.
you. Yeah, you are good at that. You're the best at reading half a book. That's for sure. So that's why I said, hey, just listen to it, okay? Just go run and put it on Audible. But it's a great book, and there's one graph in there, and maybe we get to talk about it a later time, but it's talking about the identity, like how do you change your habits, and the identity is part of that. So your procedures, your process is the second layer, and the third is like the outcomes. And which way are you working that change? Are you working it from the identity out or the outcomes in? And that was the kind of like, hey, wait a minute, let's think about that. And that's an easy thing to say, but it's a harder thing to self-reflect. And as I got talking to some of our agents about it, I thought the only way to do this the right way is to start with your identity, who you are, who you want to be, and to start making not whole changes, little changes every single day. Every single day you make changes in a positive direction. And that changes your processes, which automatically will change your outcomes. And that was the key thing that we took away as I'm walking through it with my agents. It's like, hey, you got to make that change. And my best example I could use, and I'll make it quick, is like Michael Jordan. Okay, go back to Michael Jordan in the 1990s. All right, he couldn't get over the Detroit Pistons. It was no way he was getting over the Detroit Pistons. They beat him up. They had the Jordan rules. Okay,
Yeah.
And he's like, how do I get past this? And he had to change his identity. He lost in the Game 7 of the Eastern Conference Finals. And the next day, he starts to say, I've got to change me. And he starts to work out. He gets bigger. He gets stronger. He gets faster. He involves his teammates. His teammates involve him. They change their process because Michael changed his identity, and it changed the whole outcome. Then the next 3 years, championship. Because Michael decided, I am going to change who I am and how I play basketball. And it changed the whole organization because he did that, whole team.
And history.
And it changed history. I mean, he completely changed basketball and the game that's played and the mindset that he had. It's incredible. So I think if anybody wants to read a book, that's a great book to read.
That's cool. Atomic Habits.
Atomic Habits.
Yes.
Yep. So anyways, it's a great first podcast.
Thanks, babe.
I think it was.
I love doing.
It was
I
great.
love chatting with you.
Yeah.
We have to schedule a podcast in order to have a conversation
Basically,
with each other.
yeah. At our house,
Aw.
we get to have conversations, but usually it's about how to spell a word or something or play Uno, which are fun. But I mean, it's good to have these conversations. So thanks everybody for joining us for our first time, and we look forward to coming back and having more conversations in the future. And so we just thank you for just being part of this. Thanks for joining the Caleb and Jody Moore podcast today. If you like what you heard, just hit the like and subscribe button there below.
And we want you to be a part of the process. So if you have questions or topics that you'd love for us to cover, please add them in the comment or send us a message.